Hey traders, Clifford back with another video on trading the charts. So today I wanted to go over a strategy that allows you to day trade or swing trade the S&P 500 only using price action without any indicators. So with that being said, let's get into it. Now, as far as day trading goes, I personally never really liked day trading because I didn't want to really watch the market all day long, and like when you have to watch the market all day long and look at like every single tick, it gets to be a little stressful. So that was one reason I became a swing trader. But over a period of time, after doing a lot of, I should say, education and studying the markets, I've actually found, I believe it's a pretty good strategy for day trading, and it seems to work really good on the S&P 500, also on the NASDAQ 100, and it can also be applied to the Russell 2000 index. For some reason, the stock indexes have pretty wide moves, so this strategy works really good for really all three of them. Um, and when I discovered that this strategy could work, I really started to get back into day trading a little bit. Now, I don't do a day trade every day, of course. I know some people day trade every single day. I just do it when I see a pretty good setup on my charts. So I'll show you what that is now, and hopefully it helps those of you who may be interested in wanting to day trade these indexes. Now, I use the futures contracts or futures options, futures or futures options, but I guess it could be applied to any vehicle that you want to use to trade these indexes. I know there's multiple, but I prefer those futures or options. So all right, so let's get into it. So basically, I use daily charts. If you've seen any of my other videos, you'll kind of know that. And this is basically a reversal strategy. You only have to check the market once a day to see if you get a setup like this. So we'll start with the S&P. I look at the ES, the NQ, and the RTY. So let's look at the ES for a minute. So basically what you're looking for on the daily chart, and again, you might be able to use lower time frames, but I wouldn't recommend it. I found it works really good on the daily. So that's what I'm going to kind of show it as. So basically what you're looking for on the daily chart is, it's a reversal strategy. So basically you're looking for some kind of rejection uh, of a significant level. Now, the beauty of this strategy is you do not need indicators at all. I used to, when I first started learning about trading many years ago and all the seminars and courses I took, I started with indicators because I thought that was the only way to really get an edge on the market. But over the years, I discovered that price action trading is the best indicator of all. Price is the best indicator, in my opinion. Um, can you still use indicators if you really want to? I guess you could, but I don't think you even need them. So let's get into it. So basically, I have I believe strongly in the Fibonacci rules. So you'll see me sometimes look at my daily chart and find like the high and low for the year, but actually Fibonacci can be applied to multiple time frames. So you could actually use it on a daily chart as well, even though it's only like, let's say the market has 1 day of data, you could actually measure the Fibonacci levels on that day. So here's how the strategy works. Basically, I look for hammers or shooting stars. If you don't know what a hammer is or a shooting star, check out my other video in the link below. I kind of go over it. Basically, a hammer is like the market. So let me show you an example for those of you who may not know. So okay, like this one right here. So this is the S&P 500. I don't know. We're looking at the daily chart again, March 20th, right? So this is a hammer. What's a hammer? Well, basically, if you go here, and this is what price action trading is all about. So let me zoom in here. So you have a day where this is the opening price, this is the closing price. Now that is great, but what's really significant is that the the sellers tried to push the price all the way down here, but they didn't succeed and the buyers stepped in and smashed it all the way back up here. That's a rejection signal right there. And that's significant. That gets my attention, and that is what you want to kind of like get your attention. Why is this important? Because they're rejecting this level. Well, for example, what is this level? Let me see what level this is. This is okay. So the 38.98 level in this example, right? 38.95. So they rejected the 38.95 level, and they opened the market at 39.63, pushed it all the way down to 38.97, smashed it all the way back up to close at 39.82. That's a significant uh, reversal. They tried to push it down, but then they smashed it back up. That's important. That's key. So when you see something like that, um, basically what I do is I measure the candle. So what I'll do is I'll take this tool right here, Fibonacci retracement, and I will draw a full retracement of the candle like this. Here we go. That is the candle. If you don't know what this is, check out my other video on Fibonacci. Basically, this is the high for the day. This is the low for the day. And these levels in between are like basically 50% of that high and low retracement, 38%, 23%, 78%. So how do you trade it? Well, basically what you want to do is you would actually, let me use a better one here. Cameras, well, I guess, all right, let's just use this. Let's use this one instead because this one's looks a little better here. So what you want to do is when I see this setup at night, and I always check the market at 6 o'clock at night because that's when it opens. Um, and then I'll wait till the next day and check it again at 6. So basically what you want to do is when you see this candle here, you want to look where the 50% level is. You don't want to, so the next day you want to be a buyer because this is a bullish signal, but you don't just want to buy on the open. What you want to do is place an order at the 50% level, which is right here. So if, I don't know if you can see it, but maybe you can see it better like that. Okay, there you go. So this is the full day's trading. All right. And I'm looking for the market to retrace 50% of that move. So 50% will be 39.14. You see that? See, look, if I look at the high and low for the day, if you look on your right side, I got it right over here, by the way. So the opening price was 39.53, high 39.64, low 38.65, right? So where do we want to get in? You place a limit order while you're sleeping, doesn't matter. 39.14 right here. Market, and now look what happens. The market opened, right, the next day at, where did it open? It opened right here at 39.24. Smacked down to where we needed to get in at 39.14 and then rallied. Basically, it's like a slingshot reversal that you're looking for. Basically, what you're looking for the market to do is when that candle completes, the next day you're looking for a 50% retracement back to 50% of the middle of the candle, and then you're looking for the market to take off again in the same direction. That's the strategy. So how do you trade it? Well, basically you place your limit order here. So I get in at 39.02. Oh, sorry, no, 39.14 is the 50% level. I mean, you could go 38.2. I mean, but I like the 50. It seems to work well. So you put your buy order at 39.14. I'm sorry, 39. Where am I here? 30. Yeah, 39.14. Right. And then you put a stop order. What I like to do to put the stop, go underneath the low of the candle, about here. So that's 50 points, right? Now, and then as far as your limit goes, normally you should be able to catch the average daily move for the S&P 500 is usually about 60 to 70 points a day. So the next day, as you see, boom, it actually moved up 80 points the next day. So you're putting your stop here, you're risking 50 points, and believe me, you're going to have losses with this strategy too. But most of the time, you should have some pretty good profitable days. So you risk 50. I actually like to risk 30. I don't really like to go down to 50. I'll risk 30 points, right? and then I'll put my limit order at 60 points. Don't be greedy. When the market hits 60 points, just get out. Sometimes emotions get involved and people are like, oh, it may go higher, it may go higher, it may go higher. Forget that. You know what? Rome wasn't built in a day. Your trading profits of riches ain't going to be built in a day. It's going to take time. So let the limit order take you out and don't try and be greedy, and all that. Another way you could do it is with options. You could actually, so where's another example here? Okay, let's get another example. Options. Oh, sorry, options, right. So when the market hits here, you can like put an alert to kind of like alert yourself when that price is hit, and then when you see that price is hit, you could buy an out of the money call up here too. I'll go over that in another video. I don't want to overwhelm people, but um, so that's how it works. Same thing applies to the NASDAQ. Like here's the NASDAQ here, right? Where's a good trade here on the NASDAQ? I mean, I have to look at the past because obviously we don't have a trade. Well, actually, we do have a trade happening right now. So, okay, here's a good example. I would actually trade this tonight. Like I think right now it's what is it, 7 o'clock at night? Okay, so yeah. So like this one right here, you see this well let's use the S&P as an example again. Now of course, I mean, you could also use trend lines and you can use other stuff, and there's other ways of you know, kind of deciding which side you want to be on, if you're a trend trader, if you're a counter trend trading, whatever you want to do. But the bottom line is, here's the signal tonight, right? Here's a perfect example, actually. So what do I do? How would I trade this? Very simple. Take the Fibonacci ruler, put on your levels right there. Okay. And then what do I do? So I measure, I got my levels, right? Now, what am I looking for? I'm looking for the market to retrace. So this is a bearish candle, by the way. Sorry, this is a shooting star. The other one was a hammer, not to get confusing. But so what we're looking to do here is short the market. Here we were looking to buy the market because the hammer is the reversal candle. But here we're looking to short the market. So what we're looking for is, so the market's here, 41.14. Here's a perfect example. I'm looking to get in right here. See that retracement? 41.40. The green. What is the green 50% level? Yeah, right there. 41.47. So what would I do? Very simple. I would place a buy order, right? Like this. I mean, I don't trade on TradingView, but I mean, some people do. I guess you could, but I use a different broker, but I'm just showing you how I would do it. So 41.47. I'm sorry, not a buy order. Sorry, a sell order. Sorry, got confused there. Sorry, you're shorting the market. You put a sell order right there, 41.47. Put a stop loss right above the high of this candle right here, which is perfect. That's what I like. 30 points. Like, I don't like to risk more than 30 points if I'm wrong, because you know, you want to like use risk management. You don't want to like, that's how people blow their accounts. So, you're trading futures, whether you're trading micro futures, larger futures, options, whatever. 30 points is a good rule here because the S&P moves about 60 points a day. Um, so you put a 30-point stop there, and then I'll put my limit order here at 60 points. Now that doesn't, and keep in mind, the market doesn't necessarily have to move 60 points to hit your stop. It's only got to move, to hit your limit. It's only got to move 30 points. You see that? And the average move a day is 60. So you're kind of like in the zone. You're really in the zone here with this strategy. Um, so 30 points, put your stop loss. If it's a loss, hey, you know what? Losses are part of the game. But this is a 2-to-1 risk ratio. You're risking 30 points to make 60 points, which means even if you're wrong 5 times out of 10, you're still going to make money. As long as you're right 50% of the time, this strategy will be profitable. So that's about it. That's the strategy. Put a again put a sell order here, put a stop loss above the pin of above the high of this candle here, and target 30. So double your reward versus risk. So put a sell order, a limit order to buy it out at 60 points. So now all the markets really got to do is retrace in the middle of the night, hit our short, hit our limit to get us in. We got a stop loss just in case the market goes nuts in the middle of the night. But if on tomorrow morning, let's say before 4 p.m., it hits our limit, that's it. We're done trading for the day. Now, some people may ask, well, what happens if the market doesn't retrace and hit this this short signal, nothing happens. Then I'm not in the trade. You know what? If it doesn't retrace and it just takes off without me, okay, well, you know what? That that uh that trade didn't retrace, therefore I'm not going to trade it. Remember, you don't want to be selling at the low. You want to be selling at the high, or at least in the middle, like this. Um, so that's about it. That's how the strategy works. And pretty much, again, it can be applied also to the NASDAQ. One of the things you could also look at, that I like to look at, is I don't use indicators, but here you go. So like here is one thing that I do look at: average true range. So this is the S&P 500 average true range. You see this here? 50, okay, so you go here, 53 points a day. That's the average move a day. Look at the NASDAQ. This thing can move 221 points a day. And look at the RTY, the Russell. It could move 30 points a day. So what you want to do is, depending on the index you're trading, if you know that this thing could move, what is it? Which one am I looking at? Oh, RTY, 36 points a day. Maybe for this one, go for less. Like put a stop loss of 20 points, put a profit target of 40 points. This thing, because it's the wild wild west, I mean, I would use 100 points and a 200 point profit target. You know what I mean? Just remember to always profit double what you're risking, and you'll have more profits in the long run. So that's about it for this video. I hope that strategy helps some of those who are curious about how to day trade or swing trade. Oh, and then the last thing I forgot to say is if you are going to swing trade it and you don't want to get out the next day, let's say, you could just, once you see you're in profit, you could also move your stop to break even and then swing trade it and catch a longer move by holding it and slowly moving your stop up as well. So yeah, that's about it for the video. If you guys enjoyed it, put your comments below. Look forward to seeing you guys in the next one. And as always, my friends, trade what you see on the charts. Trade well.